morning viewers and welcome to the channel. My name is Shannon Rivkin, and this week's video I'll be discussing the Sydney Airport takeover bid. Here is a chart on a percentage basis of Sydney Airport, Flight Centre, Webjet and Qantas, which I'd say the four major travel stocks on the ASX since 2019, pre-pandemic of course. And what we saw here was actually outperformance of the Sydney price up until the pandemic, and a significant fall but far shallower. And then of course we've seen this steady recovery before this big takeover bid here. Throughout this period, I've kind of made the point that the travel stocks I think offer certainly significant upside if borders open up sooner than expected, or soon enough rather, after most of these companies have recapitalized significant capital raisings and effectively steadied up their balance sheet for this cold winter. But Sydney Airport's always stood out to me as the sort of name that no matter how long this period goes, will always have its backers, because it has a lease for the airport until 2099. It's as solid a monopoly, at least in a normal environment, as we have in Australia. And in my view, Australians and the world will return to normal once we can. And I think you're going to see that itch for travel recover very quickly. Certainly before the recent lockdowns did feel like life had returned to normal. Humans do tend to like their traditions, and certainly travel is a big part of that. So I think that is going to recover very strongly one day. But obviously it's a question of how long that's going to take and what sort of impact to its cash flows and its balance sheet in the short term. Here's a little bit of this is a US stat, but shows the impact of how many passengers have been flying. This is just, I think, in US airports, and this is as at April, but obviously above 2 million passengers in 2019 over that period. This is people passing through TSA checkpoints. It dropped all the way to, looks like about 150,000, and then in up till April 13, before really international borders have opened, at least properly, have regained roughly half of that. My view is that once we do see international borders reopen fully, you're going to see these levels reached really quickly, as all the money saved by on those holidays, and burning a hole in the pockets of travellers, and certainly as government stimulus has supported so many people as well, the itch to travel I think is going to be there. Here's a little bit of an attachment of the announcement of the bid. I think the important thing to note here is that Sydney Airport is, as I've said, is as good a long-term asset as you can possibly have, but probably stands out as the sort of asset that needs to be held by a long-term investor in a private structure, such as it would be through this deal. What you've got here is a consortium mostly made up of super funds, which have long-term liabilities, the ability to obviously fund any short-term losses for the business, and of course deeper pockets than anyone else as well. So can't really think of a better consortium of buyers than this group. And while Sydney Airport's the response from the board has been a little bit frosty, I would say, at first, and a price being offered that's below the pre-pandemic levels, but significantly above recent levels, I can certainly justify an argument either way, but I think at the very least you're going to see the board fight for a higher price. They are probably up against the wall because the major shareholder does seem supportive, and of course it is such a significant premium. I think more than anything though, this is because I don't think we're going to see competing interest here. There is obviously the complication of the fact that less than 50% of this needs to be owned, can be owned by international investors, so we are only going to see potentially Australian buyers here line up to buy this thing. Obviously it's a huge bite at about almost $25 billion, so it's not like everyone else has a deep enough pocket for this sort of acquisition. So I think this will probably be the only consortium looking at it, but deep enough pockets to raise their bid. But I think the main point to gain from this is that super funds are becoming active buyers in the mergers and acquisition space. It's not just enough for them to have give mandates to fund managers to allocate capital for them or to take small stakes. They are now starting to take companies private themselves, build up management teams themselves, and this is big news, I think, for the mergers and acquisition space, and I think reason to think that we're just at the beginning of what is going to be a corporate activity boom. And so while we won't see more opportunities or significantly high prices in the case of Sydney, in my view, I should qualify that. Outside of any raises in the bid, I think, from this consortium, I think the good news is there are going to be a lot more takeover bids that we can get ourselves exposure to in the coming months and years, and I'm very excited for it. Anyway, that's it for this week's video. If this was of interest, please click like and subscribe, and I'll be back to you with a new video next week.